I'm Matt Bishar with NAREIT.com here in New York City for REIT Week 2015. Joining me for this CEO Spotlight is David Gladstone, the Chairman, President, and CEO of Gladstone Land Corporation. David, thanks so much for joining us.
Oh, thank you for inviting me in. We appreciate this time to talk to you and all the people that are out there listening to this.
Now, first, can you talk a little bit about the company's leasing strategy? Do you prefer long-term leases with the same farmer or short-term ones? And what drives rental rates for farmland?
Sure. Farmland has two types of farms. One, of course, is the shorter term. These would be produce, anything in the produce area, and anything in the corn or wheat area are very short-term leases. But there are long-term leases if you're in trees, such as cherry trees or apple trees or any of the bushes such as blueberries, and especially in the wine area where you have, those all have to be long-term because those stay around forever and a day, obviously.
And your company owns farmlands in 5 states, including California, which continues to be in the midst of a severe drought. How do extreme weather conditions like this impact the company, and what risk do you as the landowner take versus the farmer?
Yeah, the farmer takes most of the risk, obviously, but just to mention about California, there's a lot of mystery about drought in California, and it tends to not affect the farmers that have wells or other avenues for water. We have on all of our farms, we wouldn't buy a farm without water and wells, and all of our farmers have that at their disposal. So from the standpoint of a drought, we're not seeing any diminution at all in terms of rents. They continue to go up. And anytime we ever have a farm that becomes vacant and ready for somebody else to step on, there are immediate 4 or 5 people that want to rent it. So droughts are not the problem. Droughts have been a problem in other areas where they don't have many wells, but as the old saying goes in California, it never rains in Southern California. So if you don't have a well, you're probably not going to grow anything in Southern California. And so from that perspective, we've always had a good alternative.
And lastly, what impact do declining values in Midwest farmland focused on corn and other grains have on your business? Does that create a buying opportunity?
Yeah, for us, we had stayed away from it because corn prices, for example, were $8.50 a bushel and everybody was making plenty of money. Today, they're $3.50, $3.65 a bushel, and farmers are struggling in the Midwest because of those low prices. We think this may be a good time to buy. It's very hard to look at corn and wheat and those kind of commodity crops that come from all over the world. For example, if they have a good wheat crop in Russia, everybody's going to have a lower price in the United States. So we're not very happy when we're dealing in that. We like more of the produce. We like more of the staple crops that people use to eat every day, such as fresh strawberries, which happens to be a specialty of ours as well.
David, thank you so much for joining us.
Well, thank you for inviting me. We appreciate being here and talking to all the folks out there.
For more information on this and other REIT news and analysis, be sure to visit REIT.com.